today's title. State Farm warns of dire financial situation in California and asks for an emergency rate hike. Oof, that's tasty. What do we got going on? Do you feel bad for State Farm? I don't either, but from a business standpoint, let's get into it. Here we go. When I first saw this come across, I'm like, yeah, we're doing that one. Now, the counter side is State Farm, they canceled 1,600 fire insurance policies in the Palisades. In the Palisades alone, 70% of their insurance in the Palisades, they said, nope, we're going to take a step back, and it's not you, it's us. We feel that our, ability to handle that kind of, fire likelihood happening in the future, that's a little beyond the risk that we want to take. So good luck out there. Maybe you'll get some of that state fire insurance, right? Maybe that'll help you out. So you had that happen while the state of California has basically capped the ability for these big insurance companies to basically keep up with the expenses, inflation, keep up with current market conditions. And insurance companies have said, hey, wait a minute, you got a lot of exposure here because of this fire, this fire, this fire, this fire. We have insured this home, all these homes. Statistical analysis, right? This is not rocket science. This is the insurance company who basically play odds maker bets, they're bookies with insurance. They have said that this is a terrible, California is a terrible risk. We're going to pull out. And you know what? They were right. They were right in doing so because their business model is to stay in business, right? Hey, give you insurance. It's going to cost you. The likelihood of this happening was probably 100%. The insurance companies knew it. And they said for this factor, this factor, this factor. And now you got to factor in, hey, what about that reservoir that just wasn't filled with water? What about, the fire hydrants? They were nicely painted, oddly enough, a rainbow sort of coloring, but they didn't have any water in them. And you got some management issues, like Gavin Newsom basically not knowing what he's doing. He just talks a lot and he does some dancing. He does some motions and stuff. All right. But then ultimately you've got Karen Bass over in Ghana. She was in Ghana when these fires started. So, the optics, however much any of that had to do with 100-mile-an-hour winds, carrying flames, carrying sparks, just raging through an area, how much of this would have been stopped? What if 75% of the homes had rooftop sprinkler systems? Maybe that would have helped. Okay. All right. What if they would have been built with fire retardant materials? Okay. That would have helped. But you put fire sprinklers in and fire retardant materials. Now you've got people with only the utmost of resources rebuilding homes, right? Because it's expensive to put that crap in. But then it's expensive to rebuild your home after a fire levels it to the ground. So we've got State Farm here basically groveling, going, oh, we need some emergency ability to raise our rates because otherwise ain't going to happen. State Farm General, already facing financial peril before the Los Angeles wildfires, has asked state insurance regulators to approve an immediate price hike to prevent a dire situation for both its policyholders and the entire California market. Now, how many insurers are we left in California? Do we have left in California? It's only a handful, right? It got so bad to the point where they put that FAIR policy in place, basically insurance backed by the state. And if the insurance by the state runs out, these companies, State Farm, still has to chip in. It's their cost to participating in what's doing business in the state of California. California is so screwed. My state of Washington would be so screwed as well, but it rains a lot here. Yeah. We've got we get the smoke from California fires. We get the smoke from Canada fires because neither one of them cleans out their forests, right? Just let it go. We want to let the squirrels and the bunnies run around. Yeah, but when a wildfire does come, all those little critters in the forest, they just get burnt to a crisp. Weird how that works. And you got to have some of that. You've got to have forestry management, right? Yeah. On Monday, the company sent a letter to the California Department of Insurance asking for an immediate interim rate increase, including an average 22% hike for homeowners, 15% for condo owners, and 38% for rental dwellings. 38%! Wow. As it faces the most costly natural disaster in company history. Chronicle analysis of the company data found State Farm insures more homes in the neighborhoods in and around the fire perimeters than any other insurer. And that's why they are in the news so often, because they are the main one to basically hold most of these policies. They've said, okay, all right, yeah, we'll do it. Here's what it's going to cost you. So, I'm not saying that they're the insurer of last resort, but they're pretty close, right? We are requesting that you take emergency action to help protect California's fragile insurance market. How long until the federal government steps in? How long before Newsom is just like, I'm sorry, Trump, all that stuff I said about you was bad. Could you help us out? Could you lend a hand? And Trump's going to go, no. And then he'll come back around and go, well, just because I love the people of California, greatest people ever. He'll go down that road and from politics standpoint, he'll say, here's where we're going to help you out. I don't know. Who knows what's going to happen with all this? A bailout? State Farm's general preliminary financial results show its policyholder surplus, the amount available to pay out claims, was just $1 billion at the end of 2024, down from $4 billion in 2016. Oh, dwindling reserves. Is that because you've had some payouts? Yeah. I mean, and it's not just the wildfires, right? You got hurricanes, you got all kinds of stuff going on. As of February 1st, the company has paid more than $1 billion in claims related to the Los Angeles wildfires. Not shocking. And you know what? I think a lot of people see how much damage is done, and then they're like, okay, because that's going to be the amount of damage that the insurance companies are going to rebuild. Insurance companies, even if you have like a $3 million rebuild policy, your insurance company is going to come back and say, well, it looks like we've got about this kind of structure. Here's what we propose that we pay on your home. Yeah, but I was covered for much more. Yeah, but it's not required. You can build that home for $1.5 million. No, I can't. Yes, I can. And then you do that for a couple of years, just dicking around, right? And that's before you get your plans put together. It's before you do all this stuff. Pull your permits, go to the city, deal with the coastal commission. I mean, just a bunch of nonsense that expects that number, the $1 billion, that number to quickly rise once debris removal and rebuilding begin. Once the looting has stopped, essentially, right? Once the looting has stopped, when's that going to be? Top of that, State Farm signaled concerns that its losses could become even higher if the California FAIR plan, that's the state-run plan, the state's insurer of last resort, runs out of money to pay wildfire claims, which it will, and is forced to return to private insurers to make up the difference. That's kind of the backstop. That is the backstop of this game, is if the state-run insurance thing fails, and it's meant to fill in some of the gaps, right? But if the FAIR plan fails, which, I mean, the numbers would say that's probably reality, then you're left with, well, then who is going to pay? State Farm. Insurance companies purchase their own insurance known as reinsurance. That's another big thing. And in California, they've screwed that up as well, right? No, you can't include reinsurance, but then costs you pass on to the consumer, something like that, right? To tap into large catastrophes like wildfires, State Farm General, a California-only subsidiary, purchases the majority of its reinsurance from its parent company, State Farm Mutual Automobile Insurance Company. So you've got these entities working with other entities that are kind of still part of the company. You know, the company said it expects to recover billions through reinsurance. They're basically spreading their risk out, right? Through reinsurance. It's insurance for an insurance company, but even so, anticipates its losses to severely impact its financial state. Now here's where we get a nice little bar graph. All right, we got State Farm. We got the FAIR plan. Wow, I did not know that the FAIR plan had as big a chunk of business as it does. You got Farmers Market coming in third there or whatever. You got Mercury, you got Auto Club, and the other top 10 insurers. Look at that. Look at that. You've got Farmers and State Farm. You've got nobody else in there as far as homeowners and insurance, and I think this is specific to wildfire policies. You got nobody. They've all pulled out. You know why? Because it was a terrible risk. It was a terrible risk, and people are going, I can't believe State Farm is pulling out. I can't believe they've been in the market for this long and they're still viable. You know what I mean? With just the amount of damage that has happened. Absolutely mind-blowing. All right. State Farm Super Bowl pullout, part of shrinking industry spend. I mean, you literally can't make this stuff up. So on January 25th, the California Insurance Commissioner, said his department would be keeping a close eye on State Farm and all other insurers to protect millions of California consumers and the integrity of our residential property insurance market. I don't think you have any integrity of your residential property insurance market. You don't have any left. It burned up. And then what few carriers you had in the marketplace, they're like, maybe you can get some with the FAIR Act. So the department will respond with urgency and transparency. You know what? I'm going to go out on a limb here and say we should outlaw the word transparency. I am so sick and tired of seeing the word transparency. It's ridiculous because anytime it's used, you know you're getting the opposite. You're getting some opaque, non-transparent thing, right? And we believe in full transparency here, even though I'm not going to tell you anything related to the question that you just asked. So we've got transparency to recommend a course of action for Commissioner Laura. All right. Yeah. It's been 6 months since the company told regulators it needed an unprecedented 30% rate hike to prevent a potential insolvency. This is before the fires, folks. They've been screaming this from the rooftops. It'll never work. And wanting more money, right? A move that would spark immediate chaos in the California's homeowners insurance market, where State Farm General is the largest insurer by far, responsible for 20% of all premiums collected. Well, if people want to live close to a wildfire, then they got to pay. You know what I mean? This isn't something that's new. These wildfires aren't just a one-off. They happen all the time. I smell the smoke. Now, consistently in summer, I smell the smoke. What was it? Maybe 2020? 2021, we had some wildfire smoke here in Bellevue in Seattle that was so thick that you thought you were in LA. I mean, literally everything had this orange hue at like 10 o'clock in the morning. And you're like, that's weird. And it's the filtered light through the smoke. And it was terrible. So you got this 30% rate hike because California and wildfires, it's a bad, bad risk. But Monday's letter asked for the department to approve an emergency rate hike slightly lower than their original request on a much faster timeline. They need money to come in so that they can start paying off some of these claims. They need to get their cash flow going, and that's exactly what they're doing. In exchange, State Farm said it would agree to provide refunds to policyholders if regulators eventually concluded the emergency rate hike was too high. These folks that have policies, they're not going to, if they can get a policy out of State Farm, they're going to take it because it's going to be cheaper and it's going to be better coverage than what they're going to get in the FAIR Act, which is basically high risk insurance. If you've been denied everywhere else, go to the FAIR Act. They'll give you something. They'll give you much higher premiums and much lower coverage. But that's kind of how insurance works in 2025, right? More for less. But in its letter, company executive wrote that they anticipated losses from the LA fires would support its need for increased prices. Things are going to go through the roof. Insurance in general is going to go through the roof because as these expenses come in, they get spread out. They get spread out to all of us insurance paying people, right? There's simply too much at stake for SFGs, State Farms, whatever, customers in the broader market, yada, 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 yada. Okay, so they're asking for something that they'd already asked for before. They're asking for slightly different terms, and they're asking for it to happen right now. Ahora, right? Here's part 2. State Farm Super Bowl pullout, part of shrinking industry spend. We're spending less because we got more wildfires, we got more stuff, and people know that they're going to have to come to us for insurance. So what's the point of putting us out there if they already got to come to us? Kind of one of my things, but hey, let's hear it anyway. State Farm's decision to pull its 2025 Super Bowl ad was prompted by the wildfires that continue to impact the LA area. With the company's absence from the big game, no insurance firm is slated to appear in this year's live telecast. Now, I'm not a huge football guy. I know a lot of you guys are. I'm not a huge football. I don't even know who's in the Super Bowl. Honestly, don't know, don't care. Is that weird? I'll find out after this podcast. I don't even know. Yeah, that is weird. That's weird. But again, I don't care. I just don't care. But halftime ads on the Super Bowl, those are pretty cool, right? But no insurance? Not having ads from Jake from State Farm, Flo from Progressive, or Geico during the game might seem unusual, but it reflects an ongoing trend of declining ad spend from the biggest insurers in the U.S. Advertising spent from the insurance industry has cratered in recent years as underwriting costs skyrocketed, according to S&P Global Market Intelligence data. Progressive, largest spender in the category, was down 30% to $1.22 billion. Geico slashed its ad budget 34% to $832, and Allstate, that's who I insure with, $651 million. I don't know what those numbers are, but, you know, with everything that we've talked about, and we specifically talk about just basically big natural disasters. That's the only time insurance comes up. And I talk about insurance a lot because with a background in real estate appraisal and real estate sales, if you don't have insurance, you're not going to be able to get a mortgage. Just not gonna. It's not going to happen because those mortgage companies, they want to make sure that their asset that you're paying them on is covered. They're going to want to know, okay, something happens to this home, we've got the ability to rebuild it, do what we need to do, and it's not going to cost us anything out of pocket. So from that standpoint, if you can't get insurance in a real estate market, if you have liquidity issues in a real estate market, hosed. Not going to happen, right? Not going to happen. And you might say, well, Sean, somebody could pay it cash. All right. What kind of numbnut spends $3 million of their own dollars on a home and then doesn't insure it? Oh yeah, I'll just risk this. It's all my money. It's all my money in the game. I'm going to risk it all. And yeah, I know we're rebuilding in a known fire area, wildfire prone area, but hey, I'm a gambling man. Let's just see how this works out. Nah, people with $3 million in cash, they don't do that, right? They don't do that. So this is a huge, huge issue. You have all the insurance companies pull out. Good luck with that. Who's going to want to be back in there? And State Farm coming in at just $992 million, and their outlay would dip just 2%. So what you've got is you've got these insurance companies kind of hunkering down, right? You got all this craziness going on. You got all this exposure on these big natural disasters, and things have gotten more expensive. And, you know, the cost to rebuild has gotten more expensive. The cost of permitting, the cost of everything has gotten more expensive. And sometimes it hasn't caught up with insurance costs. And that's what we're talking about. California has it capped, has the insurance companies capped. And so State Farm here is literally saying, you know what? Things are not looking good. We've got a dire financial situation. We need an emergency rate hike. They'll get it. They'll get it. They'll get it. The implications of that, well, if you want to play, you gotta pay. And it's just going to get more and more expensive. I mean, the rebuild cost on some of these California homes, I mean, just absolutely mind-blowing in my opinion. That's what we're going to see. But we're not even there yet. We're not even, are we even allowing people back to their homes yet? I know late last week, that was kind of the big thing. All right. You know, Mayor Bass was like, you can all go back to your home. It's like, what's that game? Not Red Rover. Maybe it is Red Rover. You got to stop and then you go and stop, go. I don't know. She kind of did that number with the homeowners. Yeah, you can go back to your home. Oh no, you can't go back to your home. Oh, now you can go back to your home. No go. So insurance going up after a major natural disaster. Not a shocker. Make sure you're subscribed. Hit that notification bell, and I'll see you on the next one. Catch up soon. Bye for now.